All right, y'all, back to work. Boy, markets are messy here this afternoon, but that's all good, though. I got some great trades on my radar for Wednesday morning. I'm watching a retest trade right now on the Nasdaq, and I've got this beautiful spike and channel pattern setting up right now on the S&P 500. Yeah, things are choppy, things are messy. Get the big holiday coming up this weekend, but that does not mean we can't find some nice, clean, easy winners tomorrow morning on the Nasdaq and the S&P. So enough of the intro. Charts are ready. Let's dive right in and let's make some more money on what should be a fantastic Wednesday morning. S&P SPY ready to go tonight. Nasdaq triple Qs are always ready. I've got three important clues on the charts that are telling us where I think the money is made tomorrow morning. The first of three clues is right here on the higher time frame, the hourly time frame. I like to use the 60-minute, the hourly chart to give me the overall directional bias. It's very easy to see right now. The buyers are in full control on the S&P SPY, the Nasdaq, and the triple Qs. First of three clues, our directional bias is quite bullish right now on both of these markets. The second and third clue are down on some faster time frames, some tick charts. We're going to grab those and wrap this all together here in a moment. Before we do that, though, let's check schedule for tomorrow. Tomorrow, of course, is a Wednesday morning. There really isn't a lot of news we care about tomorrow. The employment number, that ADP number, 815, is definitely the big news that we know about for tomorrow. I would argue the non-farm payroll number on Thursday morning, which we'll talk about in tomorrow night's video, I would argue that is the more important report, but we will watch the ADP report tomorrow morning at 8:15. We're also watching closely right now. We're supposed to have the House vote on the big, beautiful bill, the tax bill tomorrow. That will be something we're watching tomorrow morning in our trade room. And things are definitely starting to heat up with trade deals right now. We've heard about some turmoil between the US and Japan this afternoon. So we're getting down to the wire of those deadlines, get the tax bill approved and those trade deals for middle of the week next week. So we'll definitely keep an eye on the ADP at 8:15. But I'll definitely be tuning in tomorrow morning, watching the news feeds tomorrow, see what happens with the tax bill, the trade deals. Let's get back to our charts, though, because the money is made on the charts. It's good to know when the news is tomorrow. We know what to look for tomorrow morning. Now let's dive into our charts right now. I like to use the hourly chart as a directional filter, but we're not going to trade off a time chart in our trade room. We trade off tick charts. Tick charts are based on volume. Tick charts make entry timing a whole lot easier. And by the way, that is a 7,000 tick chart. All the time frames there for you in the upper left-hand corner. And in case you're watching for the first time right now, that yellow line right there is the only indicator we need to find consistent, repeatable, winning trades each week. That is the 21 EMA. I mentioned earlier there are two more clues here right now on this tick chart. One clue is that gap. We still have not filled that gap. The Nasdaq this morning, beautiful reversal. The Nasdaq this morning, but the S&P, you can see here, still has that gap, unfilled, unfinished business, a psychological magnet around that 20 3/4. That's a big clue, but I think the most important clue right now is what I would call a spike in channel. We spiked up on, what was that, Friday afternoon last week, into Sunday, into Monday, and we're basically right now kind of grinding higher here with a spike in channel. It's not the prettiest example of a spike in channel, but you can definitely kind of tell that midline is holding right there in the middle. Spike in channel patterns, they tell us one key thing: buy below prior swings. If you see 100 spike and channel patterns, 98% of them are going to see the best entries below prior swings. So underneath that 27.25, underneath that 24.25, underneath all of these prior swings, or I believe there'll be some great bear traps waiting for us tomorrow morning. Now, we may keep on running higher here. Those all-time highs up there are just begging to get taken out tomorrow, on Thursday. We'll talk about that because I'll tell you, buying high right now is a little bit of a challenge. I've got one type of technique I'm going to use if we do go higher. We'll talk about that a bit later on in the video, so just be careful going higher here. We'll cover that a bit later on the video. My favorite trade, though, right now is definitely, though, bear traps underneath these prior swings. I would love to get a nice strong run lower, get below prior swings, fill the gap. And honestly, I wouldn't be upset if it really races low as a breakout pullback zone all the way down there. So the lower it goes, the better I like it. As it runs lower, just remember, we're not going to blindly buy down there, right? We don't make money picking tops and bottoms. What I'll do is as it runs lower, I'm going to wait for that 21 EMA to come down, and then we start looking for two entry patterns. The first one's a bear trap. Let those bears try once, go higher, and try twice. Now, the reason why I do this is because, well, first of all, I don't know how far that will go. It may keep going a bit lower there, right? But the real reason, though, is once those bears try twice, now all their stops are sitting right here. Now, think about this. If you're caught short overall bull market and you're selling into support right here, what happens if you're short and you get stopped out? You buy your way out of that position. So sellers become buyers once those stops get hit. Now we know at this point the market wants to go where? It'll want to take out these recent highs. It'll want to go up to that all-time high. So as we get that bear trap working for us, now we look for ways to add to our winner. Now, very, very important. Watch closely. A lot of people make a mistake on the add-on. The trick is a shallow pullback and a higher high in price. I say this over and over in these videos because it's so important. I want that shallow pullback to barely miss that moving average. We call that separation away from the moving average. That's the clue now that now with a higher high in price, I can now add to my winning position by buying more as we get back below that little low in between. So again, one of my favorite trades for tomorrow is get below prior swings, bear trap, and then add to our winner, profit targets coming off at that 63.5 up there, and leave a runner for the all-time high. Now, here's a question for you, a bit of a curveball. Sometimes we don't get that bear trap down there. You know, I want it, but sometimes what happens is, sometimes we see a strong run down, and it just whoop and runs right back up again. If it V-bottoms and bounces hard off of this low, I'm going to look for a bear trap, but it's a slight variation of the pattern I described before. What I'll do is mark a trend line off the high, bring that trend line down around that low. Now, very important, look left, find a prior swing, and my favorite entries on these V bottoms is to get in off the first test. We always say first test is the best test in our trade room. First touch of the low of that channel, and I want to get in right below that low. Now, in all reality, guys, this could be any of the entry patterns you guys are learning in the free video classes. It could be a bear trap, like I'm showing you here. Oftentimes, this gets below that 21 EMA. We see a 1-2 try bear trap. So my goal is to look for entries off the first touch of that low, and I go into a lot more of the entry tactic details in our free video classes. Now, here's one more question for you. What if we don't get that run? What if we don't get below that swing or that swing? What if all we get is a very shallow pullback and keep going? Again, I could easily see this thing grinding higher here and taking out the all-time high. And again, I will talk about the game plan if we go higher here in a moment. But the real key is, if all we see is a shallow pullback, I'm going to make a small adjustment. I'm looking for the bears try once, try twice, but now I'm getting in underneath prior swings. Remember, whenever I'm buying shallow pullbacks, I want to buy as low as I can, which means I have to get in below prior swings. This pattern right here is a very high percentage pattern in any situation. Shallow pullback, that's my game plan. 1 try, 2 try, in below that prior swing. Targets, of course, off the high, leave the runner for the all-time highs. Now, I want to talk about going higher here. I've got 2 trades I'm watching for as we go higher. But let's pause for 2 moments though, because I know most folks watching right now, and you guys know these patterns already. You're making money with these already. But if you're watching for the first time right now, this might be a brand new language, bear traps, add-ons, a brand new strategy. Don't you worry though, I teach this entire roadmap in a free trading course. In fact, I have a ton of examples of bear traps, add-ons. Guys, the markets are way too good right now not to be banking profits each day. What I'll do is I'll put a link up top here for you, upper right-hand corner. Hit that link that popped up there and take that free trading course, because the strategy I teach in that video series will teach you a simple trick we use in our members trade room that literally tells us exactly where the winning trades are going to be each day. More importantly though, I want to help you guys time better entries. I'll teach you 4 my favorite entry setups. Guys, bottom line, if you're still missing the best entries right now, if you've lost your confidence in your current trading strategy, what are you waiting for right now? Pause the video, hit that link that popped up there, and watch that free trading course, because everyone loves all the trade examples I include in that short video series. I have a ton of examples of all the entry patterns I'm talking about tonight on this video. The best part is it's completely free for you to learn the entire strategy. Keep in mind too, guys, I'm going to put all the important links you guys need down below the video tonight, description of the YouTube video. Start first with the free video course. Most folks start making money all on their own, all from that free video class. You're gonna love that video series. I get such great feedback from that. And don't forget too, I post a ton of charts and videos and mindset stuff on Twitter, or X as they call it these days. If you're on the X platform, give me a follow. Again, all the details you'll need, guys, to learn the roadmap, time better entries, get your confidence and your P&L back in the game again. Again, you're gonna love the free course. Start there first, link to below the video tonight here on this YouTube video. All right, so now you know more about, right, if we run lower, bear trap, right, V bottom, and if we see a shallow pullback right now, that small adjustment on a shallow pullback. Now, if we go higher here, it all depends on what happens as we go higher. For example, you'll notice we have a range right here. That range right there is going to be a big clue for me, because if I see, for example, if we see a very strong run higher here overnight, lot going on right now in the world we live in, this could easily rip higher and go higher here overnight. If I see a really big move going higher, I don't want to buy high, I want to buy low. And to do that, I want to buy a 2-legged pullback and basically try to use this range for a breakout pullback. Now, when I say 2-legged pullback, think about a measured move, right? So 1 leg, 2 leg, and of course, if you're with us in our trade room, you know that my favorite 2-legged pullbacks are a bit more than a measured move, right? I would not be upset if it was a bit more than a measured move, right? A bit more than an ABCD pattern, right? So again, one scenario is it's a strong, big breakout going higher. I do not want to buy high. I want to buy low, and I'll use a 2-legged pullback. Ideally, I'm looking left and I'm combining what is resistance right now. I'm going to use the highs of that range for a breakout pullback. Now, this is the same entry pattern I mentioned earlier, right? It's a bear trap and an add-on right now. If we see a strong run going higher, the buyers are going to want to go back up and take out that high. Anytime we see a strong move higher, we know that a 2-legged pullback and a retest of that high, that's the game plan. How do we time the entry though? We time the entry by waiting for that pullback. Again, and remember, I'm not going to pick a bottom on this. This may keep going lower. It may go all the way back down again. I'm not going to pick a bottom on that, right? I can't blindly buy that stuff. What I'll do is wait for price to pull back, 2-legged pullback, trap those bears in once, twice. And again, I like this better than using indicators for timing entries, because now I know where the bear's pain is. Right now, I know where sellers are caught short, and I can trigger those stops to be buyers. right? That's why these work so well in our trade room, right? So again, it's a 2-try, bears once, bears twice. The goal is a higher high in price, right? Sellers want to sell high. So try once, try twice, squeeze those stops. And as always, the goal is to go back up and take out that high. The challenge here will be the add-on needs to happen before we get more than halfway back up to retest the high. What do I mean by that? Well, think about this area, right? Think about that range right there, right? Think about the distance of the high down to that low. Think about this space right there. The goal is I want that add-on at least below the halfway point. That'll be our challenge, right? That'll be our big challenge. Sometimes we get it, sometimes we don't. As you can imagine, if I can get that add-on, if I can get the add-on below the halfway point, now my risk-reward ratio is at least balanced, right? But if I have that add-on above the 50% point, now it's more risk than reward. The juice isn't worth the squeeze, as you might call it. Makes sense, right? So the add-on trade is kind of the question mark right now. But that bear trap though, that breakout pullback, that two-legged pullback, right? That definitely is the trade I'm watching for tomorrow. It's basically a breakout pullback right off the top of that trading range. Now, with that said, that is if we make a very strong run going higher here. If we don't, if we keep grinding higher right now, this is the second scenario we have to be a little bit prepared for tomorrow because, again, we're so grindy right now. Anytime we see a market grinding higher into some major level of resistance overhead, what's the challenge? The challenge is I don't want to buy high. I want to buy low. Now, if you're going through my free video course right now, you should know the answer to this. What is the entry pattern we look for whenever we're worried about buying too high? It's always a technical bear trap. What that means is that as we make our way to new higher highs here, now all of these swings below us, this is now where we look to buy our entries. And what I'll do is try to get below that 21 EMA, look for ways to trap those bears in, squeeze those stops, and punch that sucker going higher here. So again, I love the idea of a big breakout and a breakout pullback off the top of that range. But let's face it, a lot of stuff going on right now. We may keep grinding higher. And again, if we start grinding higher right now, the goal is very simple. Higher high in price says I'm buying below prior swings. And when I say get below those prior swings, I'm not blindly buying down there. We're trying to get below prior swings, get below that 21 EMA. There's a lot of examples of these inside that free video course. Just remember for tomorrow, if we grind up, the entries are below prior swings, right? Below swings. You can see right away here, they're already kind of gearing up for that strategy here right now, right? There's that higher high and below that prior swing. It's pretty obvious these buyers are trying to push this thing up to the all-time highs. But again, as we go higher here, unless we see a really strong blast, my focus will be getting it, again, higher high in price and underneath our prior swings. This is the spike and channel pattern I talked about earlier in the introduction. Love the idea of getting bear traps underneath that low. And we've covered a couple different scenarios if we keep going higher here, because of course I could easily be wrong for tomorrow. I have no crystal ball. I mentioned earlier though, I have a beautiful trade setting up right now over on the Nasdaq. It's quite easy to see right now on the NQ right now. We're pretty bullish overall. Look at that pop and grind channel popping up, grinding, going higher here right now. These markets have been lit up ever since that ceasefire back in the 22nd, 23rd of June here. Now, I want to talk about that retest trade. I want to talk about a couple of trades I'm watching right now on the Nasdaq. Before we dive in though, if you're enjoying tonight's video, please help me grow this channel by hitting that like button And make sure you subscribe. I know we're all busy people these days, and I so appreciate you guys tuning in, watching my videos here every evening on the YouTube channel. So as always, thank you guys so much for all the support, all the likes, all the subs, all the love I get in the comment section below. I appreciate you guys tuning in and watching every evening on these videos. Now, I promise I'm done begging for likes and subs. It's YouTube. They make us do this here on these YouTube videos. Let's dive in though now on some tick charts. There are two really good clues right now on these tick charts. One of them is this strong run down. Now, if you're a student of mine, you know, right? Anytime we see separation, right? Look at the Nasdaq right now. Look at the separation. That pullback, that's strength. Now remember, anytime we have a bullish market overall and a strong run down, we expect a strong run to want to retest that low before we go out and resume the overall trend. In my trade room, we call these a strong move against the bias. This is a very important dynamic you need to learn as a new trader. We're overall bullish, right? So we know the direction is bullish, but the strength of that move down, there's so much short-term momentum right there. The bears will try to come in. They may not be successful, but they're going to try to come in, retest that low, and buyers will come in and buy it right back up and then resume the overall bullish trend. In our trade room, we call these retest trades, and they have been, in my experience, my biggest winning trades over the past 3 to 5 years. So that strong run down right there wants to retest that low, and I love the idea of buying some bear traps down there. I've got two types of bear traps we'll talk about here in just a moment, but you'll also see too, there's a range right here, or at least it looks like a range is forming. Lower highs, higher lows, flat moving average. Now that range is kind of like we saw earlier on the S&P, because as we go higher here, a breakout pullback off that trading range, that would be fantastic. But you know what though? We have this big drop down. We may not get that breakout pullback. This thing may squeeze and run right back up and take out those all-time highs. So let's talk about that in a moment, because that could be a tricky move going higher here. We'll grab that in a moment. But if you recall earlier on the S&P, I would love to go down, take out that low, and look for that same bear trap and add on, right? Again, we're not going to pick a bottom, but once we take out that low down there, and really guys, anywhere below that low, that 548 and a quarter level, that 548 quarter, that is a beautiful prior high right there. So anywhere, and really anywhere below that low, we are such a bull market right now, so high up right now, anything going lower will probably be a good spot for a bear trap. So ideally, run lower, retest that low. That then sets me up now for a bear trap here. Bears once, bears twice, squeeze those stops. Think about buying right into those stop losses of those sellers, force them to buy their way out. And just like that separation going lower right there, same thing here. As we start going higher, I'm watching that shallow pullback, that higher high in price. Remember, separation equals strength. Strength tells me now green light to add to my winning trades here. Now, this one could be a monster winner. Again, these retest trades oftentimes are big wins for us in our trade room. It's a bear trap and an add-on. And again, I'm going to be leaving runners, big time runners, back to retest those highs up overhead. And keep in mind too, the same variations I mentioned earlier on the S&P, we may run down, we may not get that to try and back up again. We may just whoop and run right back up again. If it V bottoms off of that low, I know these are tough on the emotions because that voice in your head will say to chase after it. I don't want to chase after it though. Mark off that high, bring it down off that low. In these patterns, your patience is almost always rewarded because now that first touch, first test, the best test off the low of that channel, I'll tell you, there's not many guarantees in life or trading, but that is almost a guaranteed winner right there. Because when it bounces up and begins to grind, remember, grinding markets are very difficult to stop. They're very strong momentum markets. So as we pop back above that moving average, we start grinding higher. I'm getting in below that prior swing, ideally, right? Below prior swing. But the most important thing is to buy that first test off the low of that channel, right? So again, retest trade, run lower, retest, back up to resume the overall trend here. Now, as we go higher here, if we go higher here, this now turns into what is basically a V bottom, okay? Whenever we see a strong run down that does not retest, all right, it becomes a V bottom, right? Now, V bottoms, write this down. Anytime we see a bull market with a sharp correction that does not retest and back up again, when it V bottoms like this, my focus now is in one spot. It's buying below prior swings. And the reason why this technique works so well is because of two things. One, we know that with that strong run down, those sellers are going to try to retest that low before we resume the overall trend. We know that about that dynamic of this situation. So we don't want to buy it as it goes higher. We have to anticipate the bears are trying. They're trying to retest that low. So the reason why we wait for the price to get below prior swings is because now let the sellers whack at this thing, right? Let them try to take a whack to go back down to that low. When they get below these lows, that's where rookie sellers are. That's where rookies are getting in. This is kind of it's a safety spot, right? We're just far enough away from all those bears who are trying to short that thing back to retest that low. Makes sense? At the same time, too, buyers, we know where the market wants to go. It wants to go back up and take out that high. And so we know that anytime we're popping up strong like this, we're buying under prior swings because that will give us the risk reward ratio we need to be a very attractive trade to benefit from the self-fulfilling prophecy. So bottom line is, whenever we see a strong run down like that, we love the retest trade. But if it doesn't, if it starts to kind of pop up and go higher here now, my number one priority is getting in underneath prior swings, because again, as we go higher, bears will try to whack this thing right back down again. Let them try, right? Let them keep on trying. Once we get below that swing down here, now I have a safe distance away from those bears. And now what I'll do is as that moving average, right, as it comes up here right now, we're trapping those bears in, wants to, right, and squeeze and stops back up again. So as we grind higher here, my focus is very simple. Getting in under prior swings, looking for bear traps, looking for add-ons, all the same techniques we mentioned earlier so far in this video. The only other variation of this is if we saw a really big run going higher, what I would then do is try to use this range for a breakout pullback. That's the only other variation of it, right? So if it pops up hard overnight, it's the same scenario that we saw earlier on the S&P, right? One leg, two leg, use that prior range as support, right? Trap those bears in with that bear trap, back up. And again, we're trying to go back up and retest those all-time highs, right? So same stuff I mentioned earlier on the S&P, right? If it grinds up, we're getting in below prior swings. If it jumps up, it's that two-legged pullback, trying to buy as low as we can. And ideally, we'll use that range for a breakout pullback. The only other variation of this is we pop up into a new range, right? We pop up now into a new range. If that happens, it's even easier, because now ranges love to rotate. Bear trap below that low and leave that rotation back up again, right? Leave that target of that rotation back up again. We'll cover that in more detail tomorrow morning in our trade room. But that's the basic game plan for tomorrow. Again, I know we're kind of messy right now, but that's all good though, because that doesn't mean we can't find some nice clean trades tomorrow morning, the trade room. Now, speaking of the morning trade room, the plan tomorrow, place to be is in the trade room, 8 o'clock Eastern time. Guys, the easiest way, start making money in these markets to learn and trade along every morning at the opening bell. As always, I'll put all the important lists you guys need to learn the roadmap, time better entries, make a lot more consistent profits, get your confidence back. Start first on the free video course. You're going to love all the trade examples. Then come join us in the trade room, 8 o'clock Eastern time, and we'll do it together every morning at the opening bell. In the meantime, guys, be well out there. Be nice to each other, will ya? And you better be here next time. Adios, amigos. Bye for now.